IONQ. Hello and welcome to U.S. Stocks. Today we're diving deep into one of the most futuristic and debated stocks on the market, IONQ, ticker symbol IONQ. It's Friday, October 3rd, 2025, and the quantum computing space is heating up. For investors, IONQ has been a roller coaster, a story of massive potential versus the realities of a long-term technological revolution. At its current price of $35.40, the big question is IONQ poised for a quantum leap, or is it still priced on quantum hype? The current picture, price, and sentiment. As of midday trading, IONQ is around $35.40 a share. The stock has seen significant volatility over the past year. It's up about 20% since the start of 2025, driven by key milestone announcements. However, it's still below its 52-week high of $42, hit after securing a new commercial partnership. Wall Street analysts are polarized. The sentiment is officially moderate buy, but price targets vary widely. Bulls, like analysts at Needham and Goldman Sachs, have a high target of $50, citing IONQ's technology lead in trapped ion computing and accelerating commercial applications. Bears have targets as low as $20, concerned about cash burn, rising competition from Google and IBM, and the long timeline to fault-tolerant quantum computing. The average target sits around $40, suggesting potential upside of roughly 13% from the current price. There's a clear split. One camp is betting on technology, the other on revenue execution. The bull case. The bull case rests on three pillars: technology, commercialization, and market potential. Technology. IONQ uses a trapped ion approach that produces higher quality, more stable qubits than many competitors. Their key metric, Algorithmic Qubits, AQ, recently hit 64, a major technical milestone. Bulls see this as proof that their roadmap is on track. Commercialization. In 2025, IONQ expanded beyond cloud access. They announced a partnership with a major pharmaceutical firm for drug modeling and expanded a contract with the U.S. Air Force Research Lab. These deals are proof of concept revenue opportunities. Market potential. The total addressable market for quantum computing is projected in the hundreds of billions over the next decade. Even a small slice captured by IONQ could make today's valuation look like a bargain. The bull case is simple. IONQ is a leader in a revolutionary field, executing on its plan. The bear case. The bear case highlights risks, timeline, and cash burn. IONQ is not profitable yet and spends hundreds of millions annually on R&D. Future capital raises may dilute shareholders, and commercial adoption may take longer than expected. Competition. Major players like Quantinuum, Google, IBM, and startups like Rigetti and PiQuantum are all in the race. Economic sensitivity. Lingering interest rate concerns and global growth uncertainties may slow adoption of high-cost R&D projects that rely on IONQ. A recession could delay profitability. The bear case reminds us IONQ is speculative and high risk. Technology is amazing, but business execution is still developing. Final take. IONQ is a high-risk, high-reward stock. Long-term investors, 5 to 10 years, with high risk tolerance can gain exposure to the quantum computing revolution. Short to medium-term investors should be cautious. Volatility and cash burn are significant concerns. Key things to watch: Q4 earnings report and 2026 forecast. New large-scale commercial contracts, progress on next-generation systems and AQ 256. Investing in IONQ today isn't just buying a stock, it's a bet on the timeline of quantum computing. The question isn't if quantum computing will transform industries, but when, and whether IONQ maintains its lead until then. Thanks for watching US Stocks. Don't forget to subscribe, like, share, and leave your thoughts in the comments. Stay informed and stay invested.